Hey guys, this is Brandon here, and I just wanted to make a quick video here. Um, Today's Friday, and I'm actually feeling quite anemic, so I haven't. I'm real tired and whatnot, so I haven't actually even really looked at the market today. But yesterday I had a nice trade, and because I'm doing the thread on how to sell things on the internet, a couple of people have said, hey, you're a marketing wizard, not a real trader. And I absolutely understand why people feel that way. And some people's opinions won't change. I feel bad because one of the people that said it is somebody that I like a lot, and I hope that over time they see the value that I continue to provide to traders on Elite Trader, and maybe that opinion will change over time. I also want to show a trade that I took yesterday. It takes advantage of relative strength and a gap. We'll start off and we'll look at the S&P 500 here. It's basically just kind of been sideways, for a while, but here, obviously this year the trend has been down. The market's down about 8% already. What I look for are stocks that are doing better than the market, that when the market pulls back, they go sideways or pull back less. Well, here's a stock, ITT Educational Services, trades on the NYSE, ESI. This is, one of those continued education places, and obviously this thing is showing a lot of relative strength. I mean, it's up over 25% for the year already. So that's the first thing that drew my attention to it, is that the sector overall, I mean, nearly every single stock in this group, DV, STRA, APOL, ESI, all of them have been a lot stronger than the market. And that's basically the surest way to grab my attention as a trader. Then yesterday, can see here that ESI had a large gap up, and anybody that's followed my trading for a long time knows that I love gaps. So we'll take a look here at this next chart, which this just shows the simple intraday chart. You can see the large gap area here, and you see the base that occurred right there. And here was the trade. Now, again, this is, everything marked up. The breakout occurred over $125 a share. Actually, my fill was at $125.28 in this particular stock. And my exit was at $129.07. So I made $3.79. I risked about $1.25 to do it. So you're looking at a risk-reward ratio of just better than 3 to 1. In this particular case, I had 400 shares of the stock, and so it made a little bit over $1,000 for me. There was the potential, if you got out right at the top, which we all know that doesn't happen, but theoretically, there was $5 in it, and if you made the $5, what's that? That's a risk reward. Pull up the calculator. That's exactly 4 to 1. This is the type of trade really that I look for basically every day as a day trader. I've actually been doing a lot more day trading lately than I have in a long time, simply because markets have been volatile. It's crazy. And the follow-through in terms of swing trades and position trades, quite frankly, hasn't been all that great. Obviously, in hindsight, you could go short, but to me, everything has been so oversold. I learned my lesson a long time ago that oversold just can easily just turn into more oversold. So, I'm not going to be looking to buy oversold. but I also don't like to short it, you know. So it's kind of kept me a lot in day trading. But again, this is just, you know, one trade I took yesterday. Um, I shared it with a small newsletter that I've got. It's free. Um, and again, you know, I've just essentially I'm really posting this as a reply to to a post that KG Harris made on Elite Trader. He's a guy that I really like a lot. I don't have anything bad to say about him. I'm not going to get in a fight or a war with him. He's a guy I've respected for a long time. He's never shown anything but respect to me. And, you know, I think he brought up a legitimate concern today. And I really, really wanted to address it. So here you have it again. This is just, you know, a quick little trade that I took yesterday.